Good morning, I'm Anthony Landahl from Equilibria Finance. With the end of financial year on the horizon, I want to provide some tips for small business owners leading into June 30. Taking a planned approach will give you the best chance of meeting your end of financial year commitments without spending your nights in front of a computer. So here we go. Number 1, ensure all your BAS statements for the year have been lodged with the ATO. If you've let your BAS commitments slip, contact the ATO to arrange a catch-up and put a system in place to ensure you stay on top of this in the future. Number 2, have a complete profit and loss statement which lists your sales and expenses. Number 3, undertake a stock take that describes each article of stock you have on hand and its value. The ATO requires business owners to do a stock take if their turnover is $10 million or more, or where their turnover is less than $10 million, but the difference between the value of their stock at the beginning and end of that financial year is more than $5,000. Number 4, have a summary of all your debtors and creditors. Number 5, a record of assets for depreciation and capital gains tax purposes. You should keep the original purchase agreements or invoices for any assets you own and records of any expenses you incur to improve or maintain that asset. Number 6, have an annual summary of PAYG withholding and fringe benefits tax and GST. Number 7, have a summary of all superannuation payments made that financial year. Number 8, consider what tax deductions can you claim. If you're a small business defined by the ATO as a business that has an annual revenue turnover of less than $10 million excluding GST, you can claim a tax deduction for most costs you incur in running your business, so long as you have a comprehensive record to prove them. If an expense is both for business and private use, such as a laptop that you use at both work and home, you can only claim the portion that relates to your business. Make sure you keep thorough records to support your claims. The ATO requires that these are kept for at least 5 years. Look at some strategic planning at the end of financial year as well. While there are plenty of financial requirements to meet, it's important that you don't overlook planning for the future of your business as part of your end of financial year checklist. How did your business perform compared to your forecasts? What are your future goals, expectations and objectives? And what are you looking to achieve in the next 12 months and 3 to 5 years? And what are you doing to reach those goals and objectives? So take some time at the end of financial year to consider your business plan, which is essentially a document outlining your plans for the future and detailing what success looks like and the changes you need to make in your business. Other items that should be reviewed are your insurance cover. Is this adequate? Do your OH&S and operational policies reflect your current ways of working and keep your workplace safe? And finally, review your financing and business funding arrangements. Are they satisfactory for your growth objectives and for your cash flow purposes and upcoming needs? Have a great day, and I hope that's assisted. And if you'd like any more information, please don't hesitate to contact me at Equilibria Finance. Thank you.